Let's bring in Tom Narayan, the lead global autos analyst at RBC Capital Markets. It's good to see you again, Tom. And listen, I don't know what you do at this point if you're one of these automakers, because 1 second it could be 25 tariffs, which would be a disaster for them. The next second it might not happen at all.
Yeah, it is odd, right? It's a very binary situation. Actually, there's some news I think apparently looks like it's hitting saying that maybe it's been pushed to March. So you're noticing that I think GM is up like 4% on this, just literally in the past like 10, 15 minutes. And it was the stock GM was down like you said, 8% since the news was announced. On the same day, they reported a huge earnings performance and a guidance above consensus. So clearly the market is really worried about it. The negativity increased there. But what we would do is highlight what happened the first Trump administration, which is there was a threat, then a deal was struck, right, between the U.S. and Mexico, and tariffs were averted. I think the base case assumption people are playing is that that could happen because the downside is like double-digit earnings hits. We saw the stock react to kind of absorb some of the negativity, and now it's rebounding because of whatever this recent news is. But so far, the market doesn't seem to be pricing in a structural long-term tariff hit.
So because I find it a fascinating mental exercise, let's talk about what would happen if these tariffs went into effect. You mentioned a double-digit earnings hit. Some say we should expect car prices here to go up by a couple $1,000s. There's questions about, I think you've made this point, that even the EVs, I guess we make the batteries here and then we ship them to Mexico to be assembled and then they come back in or something to that effect. So it's very complicated.
Yeah, I mean, it's the devil's in the details of what actually winds up being called out in the formal announcement of what exactly how the tariffs are determined. Is it final assembly where, because there's ways around it. Also, the OEMs like GM, they make pickups, sure, in Mexico. They also make them in the U.S. So they could just increase production, obviously, in the U.S. instead of Mexico. But then what happens to the supply chain, right? Most of the seats are made in Mexico. Those guys can't just change and make seats all of a sudden in the U.S. So those OEMs would have to source the seats from Europe, which would cost a lot. So what would then happen? They would pass that on to the consumer. You and I would pay more for cars, which are already very expensive.
Yeah.
That's why I think most people expect if it does happen, you'll have some inflation, but really more than anything, car sales would just come down. That'll probably be the bigger impact to earnings.
I love the granularity, too, the idea that it could be something like car seats, right? During the pandemic, we saw what happened when a small component of the supply chain is affected, like the chips for moving your car forward and back, and there's no supply suddenly. So, Tom, can you back up for a second? What is the U.S. auto industry would seem to be sort of something that the president is trying to encourage, support, again, to your point, maybe boosting production here, but I mean, it just feels like they would be collateral damage from if the effort is really to crack down on what's happening with the border, with fentanyl, with the trade deficit. The USMCA is up for renegotiation, I think it's called, in 2026. Do you think the auto industry needs to think about this as a bigger existential problem or just a near-term threat?
I mean, we don't know. It's the answer, right? But what I would say is let's look at what happened in the first Trump administration, right? These tariff threats were not used because it was a way to generate revenue for the government, right? They were used as a tool to get something totally separate, right? In that case, to your point, you're like immigration or drugs or what have you. Is it any different this time around? So that's, I think, why folks are thinking ultimately this is just used as a tool to get some agreement. We saw what happened with Colombia, right? So get some agreement on a non-autos related issue. So yeah, I do think the autos industry is thinking about it and
Tom,
maybe localizing more. Yeah, that could be happening.
On that note, and as we're speaking, so we're looking at some of the intraday charts and we're showing this effect where we've seen a lot of the automakers affected rebound on the Reuters report that tariffs might be pushed back to March 1, and now they're sinking again. And the reason why is that in the daily White House press briefing, the press secretary just denied that report when directly asked about it and said that the tariffs will be going into effect tomorrow. So now GM is giving back much of that earlier pop. And go ahead, you were saying.
Right. Yeah, well, I guess I was going to go skiing tomorrow, but maybe not. No, I'm just
Right.
kidding. I'm going to have a busy Saturday. Yeah, so I mean, the auto industry probably is, and they were already on this path, right? Remember, during the pandemic, there was this big effort to localize more, right? Not be as globalized. So I think that trend was always going to happen. Maybe you localize a little more to prevent this from happening, but it's difficult to make such a structural change. What if this only lasts for 4 years and then there's a new administration that changes it?
Hmm.
So I think these OEMs are just waiting to see what exactly happens if a deal is struck like it was the first go around. And then gradually, yeah, maybe localize more. But look, this is a global sector. Mexico is very critical for this industry.
Except for
It'll be
Tesla, which
really
is
hard to undo
ironic,
that.
right? I mean,